to tonight's episode. And I'm just so delighted to have my first official guest, first live guest. This is so cool for me. Here I've got Megan and Gabrielle, the organizers with Fossil Free Guelph. Thank you so much for joining me tonight. I might be kind of dealing with some little tech issues on the fly. Let me just check with my tech to make sure that everything is all good. But hopefully people are hearing me and hopefully people are seeing you. And I just got the thumbs up that everything is good to go. So awesome. Thank you so much for joining me.
Thank you for having us.
Thank you so much.
Fossil Free Guelph. So you're kind of the champions right now at this moment of fossil fuel divestment in Canada. The university voted, the investment committee and the board of directors voted to divest from fossil fuels. My understanding is that they do it gradually. Is that right? It's not like you flip the switch and they divest. Do you know how long it's going to take them to be fully out of fossil fuels?
Our ask was gradually over a 5-year period. So 5 years from April 2020
Amazing.
Should be when they have fully divested.
Yeah. Amazing. So I remember going to a chant here in Toronto, and it was like one of these climate change protests, and it was like, what do we want? Fossil fuel divestment. When do we want it? Like gradually over the next 5 years. Which is definitely one of my favorite chants of all time.
Definitely ours too.
Yeah.
And so I was a little bit worried because I saw the timing of the announcement, and it was like right when oil cratered. And it was like right when there was just like, so, my line was like, oh, they should have done it, a month ago. But, it sounds like it is going to be a very gradual, process over the next 5 years, that it's not like they're going to try to time it or anything like that. And I assume that that's very much sort of part of the plan there. So, really what I'm hoping is just to kind of chat with you for a little bit and, get a sense of your journey over the last probably 4 or 5 years, whenever you two got involved, knowing that this was, very much a team effort. And I think it has been over 7 years that Fossil Free Guelph has been advocating for this?
Yeah. We both joined about 4 years ago. But the campaign started at U of G 7 years ago with a great group of dedicated activists who really did a lot of work to get the ball rolling before we even came along.
And then can you give me a sense of how big is the team?
It's quite large. It fluctuates a lot kind of depending on people's capacity, but anywhere from 7 or 8 of us to sometimes as many as 30 people in a room kind of organizing and figuring out what our steps should be.
Fantastic. That's so cool. And so, the two of you personally, when did you get involved?
I think we both got involved very early.
So it was right after you got to Guelph, first year.
Yeah, I want to say I got involved end of first year kind of thing, once we had figured out our bearings of university a little bit.
Right.
Yeah, I got involved at the beginning of my second year.
Cool. Amazing. Yeah. And I'm just really curious, your first experience. So you get involved, you're probably feeling like there, some older students there, so you're learning. I imagine, you probably didn't have a lot of knowledge about investments and, structures. And so, your first experience with either the board of directors or the investment committee, it's such a wild system, what was your early experience there like?
It was definitely a bit intimidating kind of coming into a group, especially as a young student, kind of not as familiar with the movement and seeing all these really passionate, wonderful people, but they were very supportive and kind of guided us.
I feel like they were really great in helping us learn what we needed to know really quickly and just opening up, the doors for us to get involved. However we felt comfortable at the beginning. There was no pressure, but I remember just sitting in several meetings in the first, little while I was involved, just listening and trying to absorb all of the information and being so excited because it was so interesting.
Amazing. Amazing. And then, you know, throughout the course, and we did get a little question here. So chat, like, throw your questions in the chat. I will open it up to Q&A. I kind of want to get through a little bit of your journey before I sort of open it up to questions. But, you know, one of the things that's always been really cool to me have been some of the direct actions. And this is, I know, a little bit controversial, right? Because here you are trying to like push for change and do it in a way that, you know, is going to be a little bit abrasive at times. But also, like with the investment committee, like, you know, you sometimes I think people get worried that you're going to offend people or turn people off, or that, you know, can be a little bit too harsh in that way. So, you know, I'm just really curious to hear your experience with direct actions and, like, you know, any learning that you had in terms of what worked or what didn't, or like, you know, really how did direct action contribute to this win?
Yeah, that's a great question. I feel like it's been a long journey with the board and with the student body and the community throughout Guelph, which has been wonderful. Mm-hmm. And we really started off with a bit more big actions, and by we, I mean as the group, we weren't involved at that point in time. But all of those actions and the noise and campaigning on campus led to the special action policy request process being created by the university, and that gave us an avenue into kind of a more diplomatic coming to the table with the board and the investment committees, because we submitted a request that requested for divestment on the basis that the fossil fuel industry commits social injury by perpetuating climate change and through their human rights abuses. So that was our main kind of that we started really having these intense conversations with the board.
Right.
Yeah, and right around the special action policy era, to say, of Fossil Free Guelph was when Gabby and I both joined. Mm-hmm. So we actually came into a very bureaucratic way of doing things, where it was all about writing that formal report, and you know, that led to preparing a presentation for the board. And I remember that first time that we presented in front of the board with our PowerPoint and our pitch and everything in relation to what we had put in the special action policy. So the first, I would say, like, Fossil Free was very much like board oriented and kind of going through their bureaucratic processes and speaking in front of the board.
Right.
And
it's a pain. Like, I've done a little bit of board work, but it's like they meet quarterly. It takes you like quarters to get on the agenda. Once you're on the agenda, you have like a tiny little space of time. So you would have been like, and it's like they're all sitting there in their like chairs of power, feeling very comfortable with their coffee or whatever. And then it's just like, okay, like, time for your dog and pony show.
Yeah, I have never been as scared as I was the first time I stood up in front of the board and spoke. I think I was sweating. I was shaking in my boots. It was terrifying.
Oh my God.
But
that's amazing. But so good to like to you know, step up into that, and such an incredible experience there. And then, you know, is there a moment where you did feel there was a bit of a tipping point at all? Like, when did you feel the momentum change? Because I know there was a lot of resistance, you know, for a long time. And so, you know, when did you feel the tide start to turn?
We came to a point where the board had sent back the special action policy request and rejigged it several times, which was getting very frustrating for us, because they never actually directly addressed our ask. They always kind of tried to step around it, which ended up with them creating a strategic framework for investing and overall lowering the ESG scores of their portfolio as a whole, which felt very diluted and not at all what we were asking for. But they were very proud of themselves for that recommendation, and were patting themselves on the back and kind of closed the door on discussion with us. And so that point was about a year ago, I want to say. A year ago.
Okay.
And we were definitely very defeated because we didn't really know what else to do. We had kind of exhausted all of our avenues of, you know, diplomatic communication with the board. So we kind of had to regroup and re-strategize, and I'll let Gab, if you want to talk about that.
Yeah, it was a real roller coaster of those years of kind of maintaining these good relations with the boards and trying to push forwards the special action policy request, while also trying to maintain momentum in the movement on campus and make sure that just because it's in closed doors in these meetings, it's not forgotten by the student body, and that noise and pressure is maintained. And then, it was a real hard blow it was just a year and a bit ago, in January, when they made that decision they kind of just sidestepped our request altogether and didn't address divestment.
And so let me just dig into that just for a moment, because so I went to my alma mater is Dalhousie, and I think they kind of had the same situation where, pushing for divestment, and then the board came back, the investment committee came back saying, okay, ESG, that we're going to use ESG, best in class, we're going to get rid of the worst of the worst, but we're not going to do this negative screening, which I think is kind of similar to what happened there. And, it's hard for me because I looked at that's a huge win, getting them to do ESG. And I get that for you, it's not far enough. And I guess what I'm hearing from you is that really it didn't address your fundamental concern, that your fundamental concern wasn't with the broad ESG risk across all sector, that for you it really is this issue of climate change, and almost as it relates to a human rights issue. Does that sound right?
Yeah.
Yeah, definitely. And obviously the ESG and that decision by the board was a good decision. And no, we don't want to speak ill on that decision because it was really wonderful, and a good first step.
Yeah.
But we didn't see that as addressing our request.
Okay.
What we were pushing for, because under that ESG portfolio, a lot of the carbon intensive industries are not the fossil fuel industry,
right.
Strangely enough, under their the way that they defined it.
That's right. And this has been an issue for a lot of my viewers and my clients, because you get these ESG funds, like we have these investment funds, and Suncor will be in there, and Enbridge will be in there, and it's always like often a giant head scratcher, that where it's just like it doesn't seem to line up with people's expectations on it. And although it is often, a really good step, and I'm a big believer in, ESG, and that now with all the evidence that we have, that, in terms of performance, that like it totally makes sense. But what I'm hearing is you were very much of the sort of the spirit of like not one penny. And so, it really didn't go far enough for you. So how did you as an organization sort of rebound from that and then get divestment back on the table?
It was a journey. So after that vote, we definitely felt a bit defeated, and so we kind of went back to the drawing board a bit, and kind of reassessed, like, how do we restructure our group? How do we maintain kind of momentum in this movement now that we feel like all the diplomatic or previous avenues that we've had to discuss this with the board have now been shut. And so we started turning more to more peaceful, direct action, and kind of making a little bit more loud of a voice on campus. So we started with attending their board meetings. I think the first one in October, we came outside with signs to show that we felt like we were being silenced by this protest and that they weren't hearing us or listening to us. And I think that did hit hard a little bit with the board, because they had felt they'd done what we wanted to a degree. And I think that, and then the following board meeting in January, in which came in with a letter from the CSA that said their support for divestment.
CSA?
The Central Student Association.
Yeah.
Thank you.
Yeah.
So amazing. So showing even more support, showing that. And then did you know that it was going to be on the board agenda for this last meeting?
No. So we had that meeting in January, and we put up signs kind of addressing the conflict of interest of people at the board, including Martha Billis.
Yeah. One of our new tactics there was trying to call out the conflicts of interest that we found on the board, and the biggest one that we did find, ironically, was Martha Billis.
Yeah.
Okay. And and we're going to get to Martha in a moment, because she plays a pretty big role. But to let people, the chancellor, or she was the chancellor, meaning, the sort of person diplomas, and that a bit of a ceremonial position. And my understanding is didn't have voting rights on the board, but was obviously very involved and had a loud voice. Is that right?
We're slightly confused about that because
Okay.
she has voted and she did vote against divestment, actually,
Okay, curious.
without declaring any kind of conflict of interest. So we're not
Right.
entirely sure what their process is with that. We haven't
Right.
been able to get a direct answer.
Okay, so you started going after them and kind of calling out the conflicts and, you know, some of the obvious bias that was at play there. And so it sounds like you're getting, you know, you're getting sort of through there. And then from there, you know, how did you find out about this? Like, if you didn't know that it was on the agenda, like, how did you get the news?
Well, we actually, what happened was in the beginning of March, as you may be aware, with the Wet Sweatin' movement across, we followed a call out for action from the Western Hereditary Chiefs, and organized a occupation of the finance executive offices.
Wow.
Calling them to immediately withdraw their money from TC Energy.
Okay.
They were one of the main holders of the pipeline.
Absolutely. And this used to be TransCanada. They've rebranded as TC Energy. And this is the pension. And so, you know, so wow. So you just like literally camped out, like set up shop there.
It was an hour-long occupation.
Okay.
So we had 150 students come in and hold up space, and make some noise and engage in a very tough and powerful conversation with Don O'Leary, who's the Vice President of Finance at the university.
And it was through that action and the conversations that came out of the students and Don O'Leary. It was a very intense environment, that's for sure.
Wow.
And it was through that during that day, at the end of the sit-in, Don O'Leary on video said that he would commit to making a recommendation for full divestment to the Finance and Investment Committees to then be brought to the full Board of Governors.
Wow. Okay, so this is pre-COVID. This is when, right? Right? But this wasn't that long ago. Like, it's really amazing how we're in a bit of a time warp right now. So that and then the board meeting must have come very soon after that.
Yeah.
And so your timing, did you sort of anticipate that board meeting?
Yeah, so they always have a board meeting towards the end of April. And we knew that we wanted to get this item, you know, back up as soon as we possibly could.
Yeah.
We didn't know when, we didn't know how.
Yeah.
But yeah, after Don O'Leary committed to making that recommendation, he brought it to the Finance and Investment Committees. And at that point, COVID had happened. So we were all sitting at home. But we continued to have virtual meetings with Don O'Leary and heard the updates on how it got approved at the investment subcommittee meeting and then approved at the finance committee meeting.
Whoa. Okay. So first it goes to the investment committee.
Yeah.
And you get approval there.
Yes.
And then it goes to the finance committee with the recommendation and it gets approved there. And then it goes to the board meeting.
Yeah. Lots of steps.
And this was the final, you know, so the final, it's like, this is like the boss battle here where, you know, and it's a closed door meeting. So you weren't in there. Is that correct?
We were
in the Board of Governors meeting, just not the finance and investment meetings.
Awesome. And so are you like is this a virtual meeting now? So we're now in COVID. So you're like watching it on Zoom or whatever.
Yeah. And we actually did have speaking rights at that meeting. So Gab and I and two other members of Fossil Free did a pitch to the board that day as well. With all other members of Fossil Free also listening in.
Yeah.
Old and young, which is really cool. So some members who started the movement 7 years ago were able to listen into the call.
Yeah.
Which was cool.
And then you would have been present for that vote that they would have voted right after. And so describe to me your emotions, like, because it's one person at a time, or like it's like everyone, and it's virtual now, so I don't even know how you do that. But like, describe for me your emotions as you sort of watch that moment unfold.
It was a real roller coaster, that's for sure.
It really was.
The wildest part was to definitely see Don O'Leary and some of the big finance executives have completely changed their mindset. I think once
Yeah.
Don committed to making that recommendation, he, obviously worked really hard on it and came to see, I think, a lot that our arguments were very valid and true, and that it wouldn't negatively affect the returns on investments and that they could do well in other portfolios. And so just getting to hear them talk about it in such supportive language, the way we had been explaining it for years, was wild.
Yeah, it felt so surreal to hear our words regurgitated from the mouths of folks who hadn't always been supporters of this, to say the least. And then it kind of took a turn for the worse as it kind of opened up for questioning, and Martha Billis and Garrett Boss were against it, and they raised their concerns against it.
And now you had talked
made as a result of those.
Sorry, you had talked a little bit about Martha with a conflict, and so I just want to assume nothing was said about a conflict or anything in that meeting. Like, that's also, they just have this space to be able to sort of speak their mind, and then from there the vote goes through and you win. And was it like by a big margin, or was it tight?
There was only 3 votes in opposition, 2 of them being Martha and Garrett, and the other just being a board member who got, I guess, a little bit sidetracked based on the amendments that got made.
Okay.
But the amendments, there was a lot of discussion. The amendments were made very quickly, and they were talked about in response to concerns that, like, Martha and Garrett expressed, as well as a few other board members.
Right.
We were also kind of confused by the amendments at first, and we didn't know if we actually could celebrate the win.
Wow.
But then we were able to have a meeting with Don O'Leary, and he explained them, and it does not negate the fact that they have committed to full divestment.
Amazing. And I think this just has to do with if a company does like a massive transition towards renewable energy, where, sort of this idea of oil companies versus energy companies. And I think it kind of leaves the door a little bit open there in the way. But I also looked through the amendments as well, and I feel quite comfortable, in celebrating your victory with you. So, really, really well done. That is so awesome. So that must have been like a huge celebration. Like, I don't even know when you can't, like, I guess maybe you two, your roommates, you can like hug each other, but like you can't.
We were roommates at the time.
Okay, so like everything is virtual, like emojis, like just like celebrating like champagne. I don't know how you celebrate something like this in the time of COVID, but that must have just felt so awesome. And then from there, a bombshell drops, which is that Martha Billis resigns as chancellor. Yeah. So I can't imagine you knew this was coming. So you probably hear about it in the media, or maybe even by a reporter who's like calling for comment.
Both. Well, the president of the university sent out a message to everyone earlier that day, and so that was shared around within our group. We were like, whoa!
Very quickly, yeah, I would imagine.
This is crazy. And then since then, later that day, a number of reporters reached out to us.
And so this was, and I think, to me, it's just she, for whatever reason, and it sounded like she was in vocal opposition throughout the process. And it sounds like, it really was, there were some conflicts there. And I don't, I haven't explored it too much. I looked a little bit, but, it was just clear that sort of business interests. And for people who don't know, Martha is the controlling shareholder of Canadian Tire Corporation. And that, with her son, does own or have interest in a number of different sort of corporations and investment arms and sort of like trusts and things that themselves have all these investments. So it's one of these sort of like, box within a box type of situations. But, it stands, we can safely either has, significant direct investments in Alberta, in the Alberta energy sector, and or personal connections. Like, it did seem to me that this almost became a personal issue beyond just financial interests, and maybe even more so.
She actually did speak to her personal connection growing up out west during the board meeting.
Okay.
So that was very clear.
Wow.
Her family ties, her personal ties, that kind of stuff she did mention in the board meeting. And
she felt that this was like a slight on sort of Alberta and like some of that community and that sector, certainly. So it's really interesting how, here in Canada, almost how personal it's gotten with this. And I think that, you know, you're sort of coming at it. I totally understand your perspective of it. You know, the way she's feeling it is a direct attack on her and her family and her community and sort of those things. So she, you know, and as is her right, she ends up resigning. And so a question, Gab, you, like, I guess I'm trying to think, you know, if she would have been handing out diplomas, like she would have handed you a diploma in your graduation, but now it'll be someone else, or I don't even know how you're going to get a diploma now, again, in the age of COVID. We'll figure that out. But it's like, but just to be clear, that's sort of like the main role of the chancellor, I think, is that there is sort of that personal thing. And now it's not going to be her, which, you know, I imagine brings up some funny emotions in you.
It certainly does, yeah. And not on behalf of Fossil Free, but personally, I can't say I'm upset to have my diploma handed to me by someone else.
Yeah, totally. I'm with you there. And that, you know, and that really it's, and what that did, just to be clear, is that, you know, that's then set off a media, I would say, a bigger sort of firestorm, where this became, I would say, a very sort of localized issue in terms of our, you know, sort of the people who care about divestment, my community, people who are listening to this, you know, really, I would say sort of, you know, sustainable investment nerds. You know, and now all of a sudden, this was in the Globe and Mail, this was in the National Post, this was on CBC. Like, you know, the fact that the chancellor resigned over this, in my mind, made it such a bigger news story. Would you agree with that?
Yeah.
Absolutely. It seemed a little ironic.
Oh my goodness.
But she kind of did us a favor in this.
She did you a huge favor.
Yeah.
Yeah.
That's wild.
Yes.
And
thank you, Martha.
Yeah. Thank you, Martha. I mean, definitely, I would say amplified the amazing work that you've done. Cool. This is such an incredible story. I just want to give the chat a few moments. There was one question sort of a little bit earlier, you know, in terms of the organization, but I would love to have more questions. If people do have questions, like, please throw them in the chat. You know, it's kind of interesting, and I feel like the question's a bit of a dig, I'll report it, but it asks, you know, will the organization change their fuel sources? And I guess this is to say that, you know, as an organization, like, you know, it's understanding that you do sort of have personal ties to this. I think it's really important to understand the difference between, you know, sort of someone who uses fossil fuels to be able to get around, to be able to, you know, live the life that we have because we're within the system. I think investing in fossil fuels is a totally separate conversation than sort of fuel use. And that really, you know, my perspective is that these are just crappy investments, you know, both from a financial perspective and from an ethical perspective. You know, I think unfortunately when it comes to fuel choices, a lot of us are sort of locked in to the infrastructure that is available. But maybe a good question would be, you know, understanding that through this experience and looking at it through this investment lens, has that impacted you and your life and the way that you sort of the choices that you make and the way that you sort of see the world? How has that sort of evolved for you in this journey?
Yeah, we've had that kind of dig made at us quite a lot of times, just in relation to, you know, being an individual living in the system versus, you know, what we're advocating for. The thing that comes to mind right away with that, and definitely as I've learned throughout this process, is investments and where you put your monetary support show what kind of future you want.
Totally.
And what you want to see developed. And, you know, with us all knowing that we need a more ethical and climate positive future, it doesn't make sense to invest in fossil fuels. We know it's not sustainable. We know they're going to become stranded assets. And I think, you know, it's definitely changed the way I look at things and think about money and think about lifestyle and stuff like that.
Totally.
And we want to change more about the system than just this, for sure. This is just one tangible thing that we decided to start with as a group.
Amazing.
Yeah, and I feel like in talking about divestment, it's important to recognize that we don't consider divestment to be a silver bullet.
Right.
We don't think that's going to save the world's issues. It's just one piece that we think is essential as a part of a much greater ecosystem of of different actions and initiatives that are working to move us towards a more sustainable future.
Absolutely. And have you, is this a conversation you've had with like your family or your friends? Like now, obviously, you're getting the university to divest, and obviously, my mission is to help as many like individuals sort of align their portfolio with their values. But I imagine, this must have spurred a whole bunch of conversations about people's personal investments.
Oh yeah.
Yeah. Hilarious. Well, feel free to point them my way. If ever anybody gets stuck, if they want to do it and they don't know how, that's what I'm doing. Another question from the chat, have you connected with any other university fossil-free groups that, obviously this is a bit of a movement here, so just curious to know, now that you've had this win, do you think, that this does create a bit of a ripple? I know there are a number of other universities who have, but I think there had been a bit of a gap. There hadn't been one for a little while. So just curious, on a national level, any organization taking place there?
Yeah.
Yeah, there is.
Cool.
There, on one hand, yeah, I think it has been really awesome this past year, actually, or just like not 2020, but 2020 within the full year. We've seen 2 Canadian universities commit to divestment before Guelph.
Amazing.
So there has been a bit of a ripple happening across the country already.
Yeah.
And kind of through that, we've created, not us personally, but the fossil-free networks across Canada have, we've had at least 10 Zoom call style things between many different divestment campaigns from across the country, and compared strategy and difficulties, and it was really wonderful. We got to learn from UB in January about how they had just achieved divestment, and then not long ago, a few weeks ago, we chatted with McMaster about what we learned and how we achieved it, and then kind of trying to network and work together to make this happen on a broader scale in more places.
That's so cool.
On a personal level, it's been very cool to feel that broader connection of this movement nationally.
Absolutely.
And internationally.
And so, really, what can we do to help that? I'm a little bit curious, you're both, it sounds like the educational sort of journey is over, that, is there anything that I can do, that we can do, to help you? Like, is it really, supporting fossil-free Guelph? Is it, sort of taking actions? Like, what do you need right now? How can we help you as individuals, and then potentially also the organization?
I feel like our next steps, as a group, working to make sure that this actually happens and keep that accountability on the university's behalf. But I think really the next steps are, how can we reinvest and how can we work towards supporting a just transition for people who are in the oil industry? Because while I don't necessarily agree with the way in which Martha Billis approached what she had to say, I agree in the sense of we can't leave people on the West Coast stranded, but we need to work towards ensuring that those workers and those people who are reliant on those jobs have a transition. So how can we reinvest money and invest money in order to ensure that we have high labor force jobs and good renewable jobs that are ethical, because that's a whole nother can of worms, but there are definitely a lot of renewable energy companies that aren't super clean and ethical. So I think for us, the next steps is kind of like, how can we as individuals, but also as a broader community, work towards supporting those industries and finding ones that are really good to support transition.
Yeah, that's kind of where we've also gotten a lot of criticism in the past is, well, if they divest immediately, like what's that going to do to all the people who work in the industry? And that's something that we've always been, very concerned about. And we want to make sure that, the message is this divestment is gradual, just like the transition that we need to see also has to be gradual. And we want to make sure that, the working folks and everyone in our communities is able to be moved along in a good, positive, ethical way.
I love it. And, in the language that I often use, in terms of investment strategies, that it sounds like you've sort of succeeded on the what I call the doing less evil part of the portfolio. So now we can sort of shift to carving out part of the pie for doing more good and sort of being intentional, and whether it's going to be green bonds or impact investments, that there is a whole world of, really positive, impactful things that are also really good from an investment perspective. So, definitely consider me an ally, that if I can support you, the organization, in any way, please don't hesitate to ask. I know a lot about the sort of the doing more good options. There's been a lot of interest from viewers about impact investments and sort of this idea. So, there's going to be hopefully even more options in the future. But, if there's any way I can help, if you're looking for research, if you're looking for any support whatsoever, know that I'm here for you. I'm so happy that you joined me on the show tonight. I can't tell you sort of how warm my heart is, and just knowing that you've had this massive win, and to hear your story, it's incredible. It's remarkable, and really, really happy for you, and, excited to see this movement continue to grow and blossom.
Thank you.
Thank you so much. We really appreciate that, and having us here. This has been really wonderful.
My pleasure. All right, I can see there's still a little bit of sunshine outside. So you enjoy your evening. Thank you so much for your time. I really appreciate it.
Thank you so much.
Just want to shout out to the fossil-free homies in general, everyone who's been a part of this movement.
Yeah, it's been a huge movement over 7 years, and many generations of people who put tons of work into it. So
absolutely, absolutely. Thank you so
Cool.
much. All right, you have a wonderful evening.
Thank
Thank you so much.
All right.
Take care.
Bye-bye.
Bye.
Wow. Okay, that was really, really cool. That was so much fun. How to the chat? How did it go? Did we learn something tonight? I hope that was cool. As cool for you as it was for me. This was sort of my first attempt at having a live guest, so I think it'll only get better from here. But that was pretty amazing. What I want to do now is just shift focus just a little bit. What I've got for you tonight for the rest of the show is I'll do a quick little market overview just to let you know sort of where I think we're at. And then, what I do have, if there are questions, I'm happy to answer questions. If people do have, always down for a little Q&A. But what I was I actually recorded another interview earlier today. I interviewed Tanya Sermon that have oh shoot, and I'm just seeing another question from Gail. Oh no, sorry Gail, I touched on that question a little bit. I really hope that we got enough meat on that question. But that what I want to do is do the market overview. I did an interview today with Tanya Sermon. I was going to wait until next week to post it, because, CSI, I didn't want to have two different interviews on the same show. But at the same time, I was speaking to Tanya and the Center for Social Innovation. CSI is issuing community bonds, and they're almost sold out. So I kind of don't want to wait until next week, because I feel like if I wait till next week, they might sell out of their community bonds. And so I think you should really see the interview tonight. So, what I'm going to propose is that I'll do a little market overview. I'll take if there are a couple quick questions, and then I'll just just sit back. I'll play the interview from tonight. I can engage with you sort of in the chat. If people, unfortunately, you won't be able to ask Tanya questions, but I think it'll be really, really interesting. And then we can kind of call it a show for tonight. Sorry, Gail, crazy delay. I know last week there were also issues with the chat. So hopefully this isn't a huge problem. I think, my apologies for that. But let's do a quick little market overview. So, what I want to do is look at ACWI. I know Canadian Climate Challenge, they're almost sold out. Isn't that, it's incredible, sort of the demand for this stuff right now. It's so cool. In terms of the market overview, and really where I'm at is that if I look at things over the last month, roughly, really the market has been trading in a bit of a range. You can see it goes up, it kind of hit a top, and then a bottom, and then up, and then down, and it's sort of trading within a bit of a range here. And what I think is really happening right now is that we kind of have all the information that we have right now. There hasn't been a lot of new information that's come out, either about the virus itself or about the response. Day to day, these little things, but nothing has really shifted there. And what I think what's happening right now is a bit of a battle between what we call the bulls and bears of the market. And the bulls are the people that are optimistic, that think the economy is going to reopen, that it's going to go up. And then there are the bears who are like nervous about a second wave, and I think they're going to fall. And so I think what's happening is that we're kind of playing within this range. And it's tough to say exactly where it is, but it's, that's sort of what I'm seeing, is that until there is something that sort of fundamentally shifts the markets, either a major solution, a vaccine or a treatment or something like that, or on the downside, if there is going to be, a second wave of cases as we start to open things up, if we have to then shut back down, those are things that I think are going to cause the market to move sort of in one direction or the other. Right now, I expect us just to kind of like stay in this range and just kind of like to see how the next, I would say, 2 weeks to a month play out as the economy sort of like reopens. And if cases we start to see another surge, that's going to be a huge problem. And so we will have to shut down again. So we'll see. Bulls are naive. I see in the chat, maybe that's possible, but also like maybe bears are paranoid. I just don't know. If I had the crystal ball, I would tell you, but we just don't know what's going to happen. I'll just show you just because I do like looking at the VIX, and you can see that the VIX now is sort of down. Let me get rid of this. So you can see that the VIX is lower now. After hitting that peak. Let me just do it over the last 6 months where we had the peak and then things are starting to settle down a little bit, right? Again, for me, a level below 20, that's going to be not when it's all clear, but that, that's when I would feel a little bit better sort of making some bigger moves. You can see we're still well above that point. So I don't think we're out of the woods yet. And then I do like showing you the oil prices just because it has such a huge impact in terms of both sustainable investing, but also in terms of the Canadian economy. So you can see the light crude oil, this is West Texas Intermediate at about $34. So it has come back up after we had that funny little, remember we had that blip, and that we, it looks like that would be right about now. That was on the 20th. We've gotten through and it looks like it hasn't happened again this month because of some of the changes there. What's interesting is how much Western Canadian Select, this is Alberta, oil, sort of tar sands, oil sands oil. You can see that it has come back up quite a bit. So there's actually a fairly narrow, gap between them, sort of that spread between $24 and $34, a $10 spread, It's a little bit lower than what it's been for the last little while. So, this is all to say that, really a lot of uncertainty right now. I would say markets are like seemingly recovering, that if the economy opening up does go according to plan and we are able to do it safely, then, it looks like markets could start to find their legs there. Obviously, what I'm really worried about is that second wave where things get shut down once again. Just want to open it up to questions from the chat. If there are any like super pressing questions that you've got, then I'm happy to answer them now. Otherwise, what I'm going to do is just simply show that interview from Tanya. I think it's about like 25 minutes long. So, the hope is that I would basically show that interview. And then from there, obviously, if you had any questions specifically about the Csi bond, then I'll do my best to answer them. And if I don't have an answer for you, then I'll go back to Tanya and see if we can get an answer from her. So I'll just give it a minute. I'll just kind of ramble on for a few more moments just to see if there's anything in the chat. But the sense that I get is that this week, really there, nothing major happening in the markets. I want to say it's almost optimistically calm, that it's kind of like everyone's taking a bit of a breath right now. Okay, cool. So I'm not seeing any questions from the chat, so that's just great for me. What I'm going to do is bring up the video, and then maybe what I'll do is the chat will be hidden. So what I'm going to do is I'm going to play the video, and then what I'll do is have bring the chat back up at the end to see if there are any questions there. So I'm just going to take my webcam off for a moment so that I can then go full screen here. and let me do this full screen. And I'm going to hit play here, and hopefully you'll be able to hear it just fine. Thank you so much for joining Tanya's sermon, the legendary Tanya's sermon. Hold on, you're going to get a weird echo if I do that. So give me one moment. I need to change the speakers on this audio. Shoot. If I believe. Hold on. Sorry. I'm going to need to change my audio settings real quick. I'm going to put these into my speakers. There we go. Let me just go back up just a little bit. Thank you so much for joining me. Tanya's sermon, the legendary Tanya's sermon. Thank you so much for agreeing and coming on the show and talking about your this new CSI Community Bond. I've been getting a lot of questions, and so want to get into it a little bit, but I think everyone's going to be really excited to hear from you. So like how are things going? How is CSI? Like, here we are in COVID, like this is talk about unprecedented. I can only imagine the range of emotions you've been through, but like, how are you doing right now?
Mm-hmm. Yeah, well, first of all, thank you for having me here with you today. Today's an absolutely gorgeous day, and so at the moment I'm doing fantastic. But boy, oh boy, we're 10 weeks in Flatten the Curve land, and I've been in this one room struggling. I'm an extrovert.
Yeah,
I'm an extrovert libertarian combo, like the worst. I don't love it when people tell me what to do. So It's been really hard, but I'll just say that CSI, we used to think that real estate was the safest thing you could possibly do. And then you get a global pandemic that says, whatever you do, don't touch one another. It's like, well, wait a second. That's kind of our entire MO, right? We're the land of the double dippers, Tim. Yeah. And it's been a really interesting and challenging run. Now, the good news about CSI is that we're really well diversified in our revenue, right? Okay. So we're about, just to give people a sense, we're about $9 million a year. We're $5 million in the real estate business, $2 million in programming, and another $2 million in digital. Awesome. So interestingly, the digital and the programs revenue is actually going up.
Yeah.
And on the core rental business, we've had to be really agile and creative, and it's been a challenge. But what we did is we actually, with the support of our extraordinary membership, we came up with this idea of doing a community rent pool.
Yeah, like, how did this come up? Was this just like a brain? You guys figured this out quickly.
Well, I wish we figured it out more quickly and then maybe less quickly, because every time with this pandemic, every single time you feel like, okay, I've just figured it out, I know what to do now. Then the federal government comes in and does something awesome, like give you the wage subsidy or the rent program, and you're going, that's amazing, but now I'm really confused. What do I do? So we've been working, hurry up, slow down, and hurry up, slow down. Right. So bottom line is, the rent pool came out of a recognition that we needed to do something. Payday or rent day was coming, and the question that we were grappling with was, we knew that the organizations that we work with are very early stage, very small, very fragile. Many of them are not going to be able to pay their rent. So the first thing that we did is we sent out a survey to all of our members. We had a large number of our members respond, and basically we learned a whole bunch of things. The first thing that we learned is we have about 900 organizations that employ about 2,200 people. 27% of our collective staff had been laid off within the first month. That's devastating. And our members explained that another 40% were at risk.
Yeah.
So we then asked this question, like, are you in a position to pay?
Right.
How much are you in a position to pay? And what's interesting about CSI is that a very significant chunk of our members have been devastated by this.
Yeah.
And another very significant percentage of our members are doing better.
Yeah.
And totally. Their digital businesses or their education businesses, there wasn't really a one-size-fits-all solution.
No, well, and this speaks to the diversity, right? And so it makes sense to me that, you know, a lot of the organizations, I think, you know, early stage, precarious, you know, like are going to hit hard. But like, I look at my situation and I'm not doing better. You know, my business is down quite a bit, but I can still work from home pretty easily. And so I always had a sort of a bit of a balanced model. And that, you know, I think the reason why a lot of people are attracted to CSI was the flexibility, was the fact that it didn't need to be like 100%, you know, all this, that there was all going to be there. So I got that survey and I'm happy to be able to keep paying 100% of my rent. You're not getting any meeting room income from me. That's, you know, where I would do a lot. So I can only imagine, you know, on those sides. So, you know, I'm sure it's not meeting up everything, but like,
no, it's
you know,
not. So we went through the community rent pool and we've been successful in collecting 64% of our rent.
Beautiful.
But the thing, we collected 64% of our rent and we've not lost a single member because of us.
Amazing.
No one left behind. We're not going to be the landlord that goes, you didn't pay, you're out. That's not our gig. So we want those folks to come back when they're ready, when we all feel safe, we'll all come back. And then we're adapting. I mean, let's be honest, 64% is not bad. It's not as good as some of the other renters or the other things. But then we've been able to benefit from the federal wage subsidy, which has been phenomenally important. Now, of course, the question's going to be, what's the future of co-working? Yeah. What's the future of the events business? I mean, that was $500,000 a year of business. Where does that go? Cool. So we're also looking at how we're now doing reopening strategies. We're now looking at, you know, what are we going to need to do to make it safer for everybody? What are people going to, you know, how they're going to feel comfortable? We're also trying to figure out how we can have fun again. Yeah, right? Like,
that's huge.
You know, we're not allowed to eat together. We're not allowed to sit in the lounges on anything soft. Yeah. You know, we're not allowed to do a whole bunch of these things. So we're trepidatiously walking through, and you know, we always look to community to figure out the answers. And so we're doing another survey, and we'll let you guys tell us what you think we should do to keep us all safe.
Well, I've got some ideas, and I'll be happy to share them with you. But I do want to talk a lot about community bonds, because that's, I think, you know, the biggest thing. So I'm happy to hear CSI is doing well. Government supports are helping. The community is stepping up. You know, we will get through this. Like, we need institutions like CSI. And, you know, and I think that...
I should just say VCIB is our mortgage holder, and they stepped right up to support us.
And this is Van City Community Investment Bank. So they're fantastic. That's music to my ears. A lot of my listeners or viewers will know them because they bought CoPower. So, you know, if they bought a CoPower bond, you're dealing with Van City Community Investment Bank and, you know, very active in this impact investment space. So really happy to hear that they're, you know, that everyone is figuring this out. You know, I think this is exposing a lot of issues with capitalism broadly. Surprise, surprise. But, you know, one of the big things is this kind of all or nothing mentality that I think a lot of, you know, in the real estate landlords and renters, you know, it's like, who's going to take the hit? And it's like, you know, let's work together. Let's figure this out. Everybody benefits if we get through this in a healthy manner. So, you know, really happy to hear about that. But I want to shift gears to community bonds. And because you sort of like, can I say pioneered that? You were the first community bond in Canada, around the world? Like,
I think so.
Yeah.
I mean, it was an amalgam of other ideas that we kind of pulled together and you know.
So this is 10 years ago. And I had 10 years ago this month, and I had just joined CSI. I had been there maybe like 6 months, so I was still a little like meek, you know, hiding in the corner a little bit. But that, you know, really got to watch this evolve. That, you know, we were at 215 Spadina, and there was just a huge wait list to get in. So, you know, I guess you decided to buy a building. And it's like, how the hell does a nonprofit buy a building in downtown Toronto? And so you raised, I think it was about 2.3 million, something in that ballpark, $2 million to buy 720 Bathurst, CSI Annex, what became 720 Annex. And, you know, I would just how did you get that idea? Like, for so many nonprofits, debt is like a 4-letter word. Like, you just don't. How did that even come up?
Yeah, so it was really fun story. I'll try to keep it short. You know, basically, I just didn't know enough about finance to know that I shouldn't.
Perfect.
Like, I mean, basically, I think it's like the beginner's mind, you know. So, I mean, ultimately, I love real estate and I love buildings and I love creating spaces. And so, you know, we had this wait list and I was like, okay, well, you know, I've heard, I was approached by a couple of actually community bond investors, Alex Spiegel and Dean Goodman, who said, we have this building that we're working this with the owner on, and like, come take a look at it, Tanya. And of course, I was kind of like keeping my eye out, but I didn't know what I didn't know.
Sure.
Oh, they show me this building. I fall madly in love. I'm like, this is mine. I'm gonna take it. So I call up Beth Coates, who was with Cake, and she's the most viciously financially minded person ever, to kind of say, you know, Beth, can I do this? And she gives me all the, you know, reasons why not. This is why, this risk, this risk. And I said, no, but should I do this? She goes, oh yeah, you should do it. How in God's name do I do that? So we started looking at the purchase. The building, the building was like 4.5. The whole deal was $6.8 million.
Yeah, renovations, everything.
Right, and so the first challenge was the first 75%.
Okay.
And at the very beginning, we were looking at the numbers, and unless we got a loan guarantee, we couldn't make it work. Right. So we went to our friends at the city, the head of economic development,
and they stepped up.
And they said, Tanya, we love this. Yeah. Like the fact that you're coming to us for a loan guarantee when you actually have a business model is astounding. So the city council, we negotiated it, started going through committee, and we actually got it approved literally on the day. Like, we had to actually pay the seller a little extra just to extend the day, so that we could all get the deal come in through. Right. So that was 75%. Amazing. Then we had the other $2 million, and the question is, where does a little nonprofit organization just, you know, come up with $2 million? So we basically, I'd heard this idea about my cousin, or my stepbrother was flipping real estate inside an RRSP. Yeah. And I was like, how does he do that? So I looked at it, and then I called Scott Hughes and Brian Eiler, who are the co-creators of this. And I said, you know, could we turn our community assets into financial assets? So what if we just like got a loan from our community? And they both kind of look at me like, yeah, we could do that. And so then the challenge was, you know, how do you set the rate? Oh, you know, how do you go through these things? But bottom line is that we had 60 crazy, courageous souls who stood up with us and literally closed. I think it was on May 18th, 10 years ago, 3 days ago. And we raised, I literally, Tim, was running around on my bicycle picking up checks the day of closing to get it in there like it had never been done. So unprofessional, but it was just amazing.
Hey, you got it done. You got it done, and that was the first.
It's the first, and that was $2 million. 60 community investors. I love it. And they're just an amazing group of people, which I'm so great.
And then so from there, so there was the bond campaign. We did that. We had the second raise. So this was so that you could buy 192 and basically move across Spadina and do that. And that went really well. One thing that I'd love to ask about is, you know, because I remember I was sort of there when we got the news that, and it speaks to your original vision of being able to hold these real estate assets inside an RSP. And that, you know, and for a while we sort of could, the banks would do it a little bit begrudgingly, but they would do it. And then if memory serves, it was basically in the same week, every major bank in Canada just kind of like shut the door, saying that legally we get that you're allowed to, but we're going to charge you, I think it's like a $250 placement fee, and then like $100 quarterly holding fee, or like they just all just like jacked up the fees.
It wasn't just even the fees; they just wouldn't do it. Like,
so they just started refusing.
That's right, and it was they said it was something related to the the real estate crash in 2008, but this was in 2012 that this happened, and we didn't even know it had happened until we started to like want to look at renewing for some people, and people were wanting to get out. We were looking to buy bring new people in.
Yeah.
And they just arbitrarily decided, and it wasn't a government decision, it was a bank's decision.
Right.
And what that did is it meant that, so my original investment, I put in $100,000. I literally took a mortgage out of my house to get a bond for, and we put it into our RSP, my husband and I, and that was amazing because it meant I could actually put a sizable amount in. Yeah. When they cut off the RSP eligibility, our minimum investment, which had been $10,000, had to drop to $1,000 because people just don't save in that way. And they basically completely screwed us. Yeah. I mean, our entire strategy.
The whole campaign.
Yeah. So now our minimum is $1,000.
$1,000, which, hey, I'm happy about because it's super accessible. So I'm thrilled. You know, I wouldn't be able to buy a bond at $10K, but I can buy one at $1,000. And that I will let sort of viewers know that, you know, so I do have a path for these community bonds using Questrade, like a self-directed RSP TFSA. We've gotten co-power bonds in there, and that in the past we've had Solar Share. I'm still waiting to see whether the new Solar Share bonds can go through, and that'll be a bit of a litmus test because they use Tapestry, Community Capital, which you guys use as well. So there would be similar. So I would have a high degree of confidence if we can get Solar Share, we'll be able to get these new CSI bonds in. But at this moment in time, I really can't promise that for sure. Like, they are legally RSP TFSA eligible, but we just don't know if we can actually do it or not.
And it's usually the bank just says, if you're already wealthy and you're already a qualified investor, it's no problem to take care of you. Right. But if you're not, which is like most of us, then they think it's just a pain in the butt. Yeah.
So they're just, you know, once again, it's just not a priority for them, and it's so sad because, you know, this is something that, you know, their clients, like, you know, in my mind, this is how you build loyalty, is by letting clients, you know, do this type of amazing investment. And so to me, it's just absurd that they can't, but we are where we are. So I do just kind of want to talk about this round. So where we are right now. So, you know, I'm just going to bring it up on my screen. That, but basically, you know, CSI has an offering available right now, and that this is the CSI Community Bond 2020. And I'll just, you know, let people see what's sort of on the website. 3% annual return. You're locked in for a 3-year term, and the minimum investment is $1,000. And it's just straight up. I love that you're not messing around with sort of, you know, too many different series. Like there's one, you know, 10K, right, with no compounding. But really, I think most of my clients are going to go towards the $1,000 bond where the interest compounds annually, which I'm really happy about, by the way. I like compounding bonds. I know it's easier for you that you don't have to write these like $14 checks and like these tiny little interest payments. And so, but for me, like music to my ears, I don't think anyone who's buying a $1,000 bond wants that cash flow. So we're happy to let it compound. And that, you know, so now this bond was sort of slated to launch pre-COVID. You would have done all of the homework, everything there. Now it seems like, you know, the campaign to raise this money sort of has to evolve. And so I'm just wondering kind of, you know, where you're at, how have things changed in the past couple weeks? And, you know, and then, you know, really what is the money going to go towards?
Yeah. Well, first of all, it's been really an interesting bond campaign because, of course, this is a renewal for those people who had originally invested in the 10-year bond. So we graduated the original investor community who, I have to say, we're getting a really nice return. They were getting prime at 1.75 because they were the first in, and that was pretty sweet. So for CSI's point of view, what we're doing is the first priority is simply to renew the bonds that had been bought out 10 years ago. So we've set this date 10 years ago. This was all very planned. So what we did is we first gave the first right of refusal for renewal to all of those existing bondholders. Okay. And we have a good million and a bit renewed immediately at the dramatically reduced rate. So we were very pleased to see so many renew. And then what happened is we started to go for you know, make sure that our staff had the opportunity to buy bonds right up.
Oh, wow.
Yeah. And in fact, I'll just say I don't think it's confidential, but several of us have been a little bit nervous about payroll and have voluntarily offered to take a pay deferral.
Okay.
To make sure that CSI is good through the pandemic. And one of our staff, wasn't my idea, had the creative idea of having our deferred pay go into the bond.
Whoa.
So that's what many of us are doing. We're actually having our deferred pay go into the bond. So that's
stretch
fun.
it out over 3 years. That's brilliant. I love it.
That's right. It's perfect for everybody.
That's
win,
so
win,
smart.
win. So that's neat. So now we've just gone public with it about a week ago or a few days ago.
Yeah. And
we've had already, we're aiming to raise 1.9 million.
Okay.
We've now successfully raised 1.4.
Oh, jeez.
We're totally flying off
in a week.
In a week.
Oh my
We have
God.
77 new investors that have joined up, and I'm not joking. Don't think about it too long, my friends. Here's what's happening, I think.
Yeah.
One, we actually have retired almost $1 million of the bonds.
Okay.
So we brought down that exposure from 6.5 to 5.5 because we could, right? So we're in a very strong financial situation. Our board we could have financed this in a lot of different ways, but we decided we wanted to do the bond, even if it didn't. It would have been easier to go to one investor, but we want to prove that this is a viable model.
Yeah, and let people buy into it. Like, for me, I'm so much more engaged. So I'm a bondholder from the Spadina location. Yeah. And like, I'm more invested as a member, as a supporter, as, everything, so it makes a difference having some skin in the game.
It's absolutely the way our economic systems should be working. They're healthy. And so it's our commitment to social innovation and our commitment to social finance that wants us to go back to this process. So we have another $500,000 left to fill. Kyle, who's the campaign manager, is like, yeah, I think I can get that done in maybe 7 days. I was like, really?
Jeez. Okay, I was planning on airing this next week. I might have to just go ahead and air it tonight.
You do whatever you want to do. It's going great. And
amazing.
What we're really looking at is, we are replacing the bonds. That's number one. But look, the other thing that we're doing is we're ensuring that we've got the cash flow to help ride us through this pandemic.
Absolutely.
We're in a strong position from a cash flow perspective for a little nonprofit organization. We're doing fine. But then we're also really looking at how we can use that capital to ensure that we really are accelerating the next economy, right? Our mission in life, and as we become more and more clear about how we can be a part of this solution, it's about ethical investing. It's about social enterprise. It's about actually crafting and demonstrating what the next economy looks like.
Totally.
And these are the kinds of tools that allow us to show the rest of the world that another way is possible.
Yeah.
So
absolutely.
we want to do that both through how we operate and also what we do. And so the work that we're focused on with the SDGs and accelerating, we're doing some really interesting, exciting stuff around food resilience and affordable housing, which is stuff that you're going to see in the next little bit. So
cool. I'm so excited. I feel like the sort of the social finance and enterprise and, and really this impact investing ecosystem is just, there's such a pent-up demand. I'm thrilled to see that. Co-Powered, they sold out like hotcakes. Van City, not the Community Investment Bank, but Van City, did a Unity bond that sold out $200 million.
Wow.
Like, super quick. So there is a hunger for impact investments. There are not enough products. So, let's start thinking about the next round.
That's right.
And because I do think there's so much interest here. Thank you so much, Shani. This has been super cool. It's great to hear the story. I think people are really going to get a kick out of this. It's too bad you weren't able to do it live, so I couldn't ask questions. But if people do have questions, are you okay if I just kind of send them your way, and we can either through email or get you on or whatever? But like, if there are some very pressing questions, we'll do our best to answer them. I do want to give a little shout out. You told me some exciting news, which is that with your personal money, that you fully divested from fossil fuels.
100% fully divested. It took me a little while, but I'm super pleased. Now I'm trying to get out of Amazon stock. That's my next
That's Amazon. Yeah, I'm into it.
You gotta go.
This is so for what it's worth, and I'll talk a little bit more about this later, but that, I really think that the social aspect and labor and understanding how companies are treating employees, that this COVID is really showing us which companies are putting employees first and which ones just very clearly aren't. So, okay, I can support that. Let's get Amazon.
Tim, thank you so much for the opportunity, and thank you for the amazing work that you're doing with you and your community. And for, 10 years ago, you were one of the early guys that said we can invest differently, and I'm watching you, baby. You're doing great work.
Well, we've got some big things planned, and definitely I feel that there is this is forcing change. So all of us change makers that we're just kind of waiting for something to come along and force it. So it'll be really interesting to see how we emerge out of this. Thank you, Tony. You enjoy the sunshine.
Thank you, you too.
And we'll talk to you soon.
All the best. Take care, everyone.
All right. So I'm back here. Let me get my webcam back on and transition. So I should be back on. Hopefully everyone can still hear me. So that was the interview. That was super, super, super cool. Let me just see here. A question from Gail: why would one choose the non-compounding option over the compounding? So so we can just take a quick look at them. That's a good question. I don't have a great answer for you. I don't know really why someone. To me, it's pretty straightforward that the compounding option would be better. Oh, where'd they go? Here we go. Really, the only reason why you would want the no compounding option is if you needed the cash flow. Like if you were in retirement and living off this money, and it was just like, this was how you were like funding your retirement, or like needed that cash, then definitely this would be, you'd want to get that cash coming to you. That said, if you're investing $1,000 at 3%, we're talking about $30 per year, right? Like, and they do it every 6 months. So it's like $15, twice a year. So really, 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 there's no reason to get the interest paid out. I think it was just that when they started these community bonds, it was like, well, this is how a bond works, that it just does this. And then I think it was CoPower that came along, and they were the first ones that really offered a compounding option. And then from there now, I think a lot of these groups are getting the memo that like we prefer compounding returns, that's going to be a better structure. So really, Gail, to me, the only reason to go with no compounding would be if you needed the cash flow. Otherwise, to me, I look at it and I want that compounding interest rate as much as possible. Ayeta, been thinking of you, need to send you an email to check in on you, but really so glad to air this interview as well. Is it too late to get bonds at CSI? So no, not at all, but this is something we're going to have to move on a little bit quickly. So maybe we can set up a meeting sooner rather than later. If there are people that are, unsure how to do this, know that I can help you through this process. I want to reiterate that we probably can't do them through an RSP or TFSA. So if you're in a hurry about, you really want to do this, then we'll probably just simply use unregistered funds. And then what we would do is we would only do a small amount. We might do $1,000 or $2,000. You don't need to like blow the bank on this. This isn't, and but really, it does mean that we will be paying taxes on our 3% earnings. So not the end of the world, but what I would say is that I would say like really go ahead if you've got your rebalancing tool and you've got some cash set aside and you've got some sort of unregistered money, then I would say just go ahead and buy them while you can. Obviously do your homework. So look at your frequently asked questions, understand the risks. If you have questions about the risks, let me know. There definitely are risks when it comes to this, so don't invest more than you're sort of prepared to lose. Although, really, I think these bonds, I feel really good about them. Certainly, I see the impact day to day. I do have a conflict here. I'm a member at CSI. I'm a bondholder, but I see the impact that an organization like CSI has on me, on my business, and on the broader sort of social enterprise community here. And it's just so tangible and it's so wonderful. I really need for CSI to exist coming out of COVID. Some people are dreaming about patios or, going traveling, like they want to go back to Paris or something. I'm like, I just want to go to CSI and I want to bump into my friends there. And, that really is kind of my post-COVID dream. So this is a great way of doing it. Cool. From there, great show tonight. Very inspired. I'm so glad. This is my hope. How did you guys feel about the interviews? It was kind of cool for me. You got a little flavor of the two different styles. I love having people live because they can answer questions, and I think it's a little bit more engaging. It's a little more fun for me. But also, some people just aren't going to be available Thursday night at 7 p.m. So, really want to be able to give you access to some of the brightest minds in this space. So if it's cool with you, I think I'll try to find a balance between doing the Q&A and then also doing the interviews. I'm not quite sure how I'm going to work it out, maybe 1 week and then 1 week, something like that. If you emailed me a question for this week, I did get it, but I'm just going to hold off. I'm going to wait until next week to be able to do that. And then also know that I'm just constantly getting better with the tech setup. So especially with Tanya, you'll notice that the layout, wasn't great and we didn't have the best connection for her. So, really my goal here is to just simply improve things every week. If I can just get a little bit better, then I think that would be fantastic. So that's it for me for this week. If you're watching this on YouTube or, if you're watching it live, if you've made it all the way through the video, then please give me a like or subscribe to my video. I'm starting to notice that the YouTube algorithm is picking up, and it really is the most helpful thing just to like the video and to subscribe to my channel. I'll be releasing this full episode. It goes up automatically right at the end, and then we'll probably do the 2 interviews just as little separate YouTube videos in case you just want to watch that part of it. But thank you so much for joining me tonight. Everybody have a wonderful week, and we'll see you next week. Bye-bye.